Hi guys, it's Stock Curry, and with the shortened trading week with the markets closed on Friday, we have some very important market news coming out this week that could affect the markets not only for this week, but for the next 3 months. So let's get into it! The first major market news that we have coming out this week is the March CPI inflation numbers that will be released on Tuesday at 8:30 a.m. or about 1 hour before the market opens. Economists expect the consumer price index for March to have accelerated to 8.4% for the year. Now, if the numbers do come in that high, that is going to be the fastest rate of inflation that we have seen since 1981, or well over 40 years ago. And this is going to cause more concern for the Fed. They're going to have to be a lot more hawkish, a lot more aggressive in raising interest rates in order to get inflation down. Now, if the inflation comes in even higher than 8.4%, let's say it comes in at 8.5, 8.6%, we could see the markets go down significantly starting on Tuesday, as that shows that inflation's even worse than expected, which is going to be really bad for the economy. Now, in the event that inflation comes in lower, let's say it comes in at 8 or 8.1%, we could see the stock market absolutely rally on Tuesday. So the CPI inflation numbers are going to be very important for what happens on Tuesday, and more than likely, whatever that is, will most likely carry over into Wednesday and Thursday. And the other big news that could affect the markets for the next 3 months are earnings. We are back into earnings season with everything kicking off this week. Now this week, it's going to be all about banking stocks, with JP Morgan reporting on Wednesday before the open, and then Wells Fargo, Goldman Sachs, Citigroup, and Morgan Stanley all reporting on Thursday before the open. Other notable earnings that we need to watch out for this week include Delta Airlines on Wednesday and TSMC, or Taiwan Semiconductor, on Thursday. Delta Airlines is going to give us our first insight into how travel stocks are going to perform this year as high inflation kicks in. Now, this obviously, high inflation is really bad for travel stocks, especially airlines, because the cost of gas prices goes up significantly. And we need to keep our eye out to see if the airline industry has been able to raise prices in order to keep up with the higher cost of gas. If they haven't, that means profits have gone down, and that's going to be really bad for travel stocks. But if they have, then that might be okay. Now, in addition to that, TSMC, or Taiwan Semiconductor, is going to be another really important one to watch out for, because that is going to give us an insight into our supply chain disruptions. Obviously, semiconductors are holding back everything from cars, computers, all kinds of electronics. So we really have to focus on TSMC to see how companies are handling the supply chain disruptions, see if we get any insight as to whether things might get better or if things are going to get worse. In related news, Nio said they are shutting down operations for a short while due to the fact that they just can't get enough parts in. They have to shut down their factory due to supply chain disruptions on Monday. So that's obviously bad for Nio. We got to see if this is going to be carrying over into other companies as well. Overall, this is the first earnings season we're going to get during this ultra high inflationary environment. It's also our first earnings season for everything that happened in Q1 of this year, or 2022. So it's going to be really important to see what all these companies have to say, and see, mainly the most important thing we're looking out for is to see if inflation will continue to hurt profits, or if companies have been able to raise prices enough to overcome those higher costs due to inflation. If companies have been able to raise prices and overcome the higher costs due to inflation, then everything should be okay. It means companies continue to have price strength and they can continue to raise prices in order to overcome inflation. But if companies have not been able to raise prices in order to keep up with inflation, or especially if wage growth, which is companies' number one cost, has exceeded their ability to keep up with higher prices, then we could see profits come down significantly, and that will have a very negative effect on the stock market for the next 3 months, possibly for the rest of the year. Now, we're also going to have to see what the banks forecast recession-wise. JP Morgan is the nation's largest bank, and JP Morgan reports earnings Wednesday before the open. We'll be listening closely to what the CEO of JP Morgan, Jamie Dimon, has to say about his prediction for a future recession and how it might affect banking stocks as well as the overall economy. On Friday, I discussed how the market technicals had just turned bearish. If you missed that video, I'll include a link for it at the end of this video. For now, I want to go over the history of the stock market and look at how the stock market historically performs from April onward during the current environment that we're in right now. Since we are in a midterm election year, let's see how the market typically performs in a midterm election year. Typically, the market starts to pull back in January, and the period from April to September are the worst months. Then, the last 3 months are very bullish and can actually turn the entire stock market green by the end of the year. So, if the S&P performs the same way it normally does, we will probably trade in a choppy downward to sideways direction for the next 6 months. Then October will be the time to load up on stocks and ride the bull run back up to possibly new all-time highs. The market should really start taking off in the second week of November, right after the US elections are held. So history is lining up with the technicals, with both pointing to bearishness for the next 6 months. Now, the S&P 500 so far has been fighting off the bearish technicals of the MACD and RSI. The candles remain above the 21-day EMA for now, but if the candles close below the 21-day EMA, the S&P should fall fairly quickly, as then all of the technicals will be in agreement. The QQQ technicals are already all in agreement, with the RSI dropping, the MACD with a death cross, and the candles below the 21-day EMA, as well as the Fibonacci retracement levels. So the NASDAQ is far more bearish than the S&P 500 is, which is why the majority of our put options are on QQQ, with only a few on SPY. In other news, Elon Musk has decided not to join the Twitter board. And if you look at the TWTR chart, it ran up in expectation of Elon Musk joining the board. Now that he's not joining the board, I do expect TWTR to drop significantly this week. Now, while I could not have anticipated Elon Musk not joining Twitter's board, I did expect the TWTR price to come back down, which is why we opened put options last week. And one of those put options, our $50 April 14th put option, was already up 142% as of Friday. I do expect this put option to be up significantly more on Monday. By the way, if you want to know everything that I buy and sell before the trades are even filled, as well as my reasons for buying and selling, you can come join our VIP Discord. In the VIP Discord, I post everything I buy and sell before the trades are filled, and I also give you my reasons why I'm buying and selling so that you can decide whether or not you want to join in on the trades. We have been making a ton of money over the past few weeks, as I'm sure you've seen in all of my prior videos. So what are you waiting for? If you want to make 142% profits also, then come join the Stock Curry VIP Discord, where we are profiting day and night. You can sign up at stockcurry.vip/getvip. That's stockcurry.vip/getvip. Now, the last thing I wanted to leave you with is just a quick discussion and some tips on why I'm not giving you guys any stock picks. As anybody knows who's been watching the channel for the past year or so, last year we were talking about stock picks and buying stocks all day long. And then in December, I started realizing we're probably going to get a bear market. And I transitioned away from talking about stock picks and more into market updates. Now, the reason for that is, quite frankly, I'm just not buying a lot of stocks right now. And the real reason for that is why, let me ask you. Why would you buy stocks if you expect them to go down in price? I mean, generally, when you buy a stock, you're expecting it to go up in price. Now, I do want to clarify a little bit of difference here between a long-term portfolio and a short-term portfolio. In my long-term portfolio, there are a few select stocks that I have been dollar cost averaging into. Mostly the stocks that have continued to go up while we are in this bear market. Stocks like CLF and VALE and GLDG. Those are the stocks that I've been adding onto, but everything else, I've just been waiting. I've been holding cash, and I've been building up my cash and building up my cash, and I'll probably continue to build my cash for the next 6 months to a year. And the reason for that is I completely expect stocks to continue to drop in price. So it doesn't make any sense for me to buy a bunch of stocks when I expect the market to go down. So for that reason, I'm just holding cash, because what I want to do is, obviously, I know I'm not going to time the bottom perfectly. That's not the point. But when it looks like we are starting to get near a bottom, when the economy looks like it might be bottoming out, might be starting to turn around, if the Fed stops getting as hawkish, they start becoming more dovish, we're looking for any of those signs in the economy that the stock market might start going back up, then that's when I plan to take all this cash that I have and I'm building into over the next 6 months, and I plan to start dollar cost averaging into stocks towards the end of this year and into next year. Now, I'm still going to be wary and cautious because I realize we still have a recession somewhere in the future. Unfortunately, timing a recession is nearly impossible, so we have no way of timing that. So all I can do is look at other indicators in the market and try to determine when we might bottom out. And right now it looks like we might bottom out towards the end of this year. October, November, somewhere in there. So it's really important that as the market conditions change, as we transition from a bull market where we want to be buying and buying and buying and making money to a bear market where stocks are going down and down and down and down, that we stop buying these falling knives and losing money, and we just hold and we wait, and then once it looks like we're near a bottom, that's when we want to buy back in. Alright guys, I hope you got a lot out of this video. Go ahead and comment down below what you think of this whole Twitter situation and Elon Musk not joining the board. And also, I wanted to remind you that Webull is still offering their best promotion ever this month, where you can get 5 free stocks worth up to $9,600. All you have to do is open an account using my link in the description below and deposit just $1, and Webull will send you 5 free stocks worth up to $9,600. Also wanted to remind you that New York residents are now able to trade cryptocurrencies on Webull. So if you wanted to open an account to trade crypto on Webull, you could do that as well. Also, if you're not a U.S. resident and you want to get in on these option plays with us, I wanted to remind you that Interactive Brokers does offer options trading throughout the world, including in the UK. So if you're interested in trading options with us and your broker doesn't allow it, go ahead and open an account with Interactive Brokers. I have a link for that in the description as well. I did want to remind you that I do have material connections with both Webull and Interactive Brokers. So whenever you sign up for either one, not only are you getting a great broker to trade with, you're also helping me to continue to produce these great videos for you. Now finally, I want to remind you to hit that like button, subscribe, and click the bell icon and click all so that you can get notified when I release my next video. I hope you have a lot of success trading, and I will see you tomorrow.